Hey guys, this is Jerry Broussard with CajunMoney.com. Just thought I'd put a video together this weekend after watching the market becoming very volatile over the last couple of weeks. I have not done a big picture video in several months. I thought I would start doing them on a quarterly basis because it seemed just a little bit too often. I had a few comments that pretty much said, if we're looking at the big picture, why do we have to look at it that often? It should be kind of a longer term view, and it is. So I kind of agree with that. So I backed off to start doing them on a quarterly basis. And I know we're not at the beginning or the end of a quarter. We're actually in the middle of one. But I thought I'd put together just three charts, give you an idea of what I see going on and my thoughts of what's happening, just to give you an objective view or another view from what you might be seeing from the news media and newspapers and radio and whatnot. And we'll jump right into it right here. First chart you see here is the S&P 500, and the S&P 500 is a representation of roughly 500 stocks, large company stocks in the United States. It's what I most often use as a proxy for the stock market. And you can see here it's a point and figure chart, which I've done quite often. If you go to my blog, CajunMoney.com, I have a section there on what are P&F charts. Give you an idea of why I look at these. But real quick, you can see I'm putting a couple lines on the chart now that shows how it's been going sideways. Some up and down movements, but pretty much just going sideways. And right now it's about 8 months in that we're on a sideways move. And we'll show you a little longer term chart in a second as to why I think that's not actually a bad thing. Now these charts are automatically built by a computer program that I'm using, and you'll notice the red box here where my cursor's at shows a PO, which means price objective. The computer kind of does all this calculation. It's estimating that the stock market could drop as low as 2010 on the S&P 500, which is not a huge drop. Actually, from the high to there, it would be about a 6% drop in the market, which is, in a stock market, that's really not that much of a big swing. But we turned around in the last week, and you can see where the arrow's at. We had started to turn back up again from the previous week's drop in the stock market. But the big takeaway from this chart is actually the sideways move. This is a daily chart, by the way. So it's how the market is moving throughout the day. And so let's move on to the next chart, which will give us a monthly chart, or monthly view, I should say. What happens in this chart is it pretty much is a much broader view as compared to the previous one. And as you can see at the bottom of the chart where the numbers are, it goes all the way from the year 2000 to the year 2015. And towards the right side of the chart, it's pretty much going straight up since 2009. And in months past, when I've showed this chart, I did mention that one thing that concerned me a little bit was that we're so far away from the blue line. But at the same time, I also said that we could stay as high as this for years before it even starts to make a move down. I don't know if the market has any indication of going that direction as of yet. Again, I'm gonna put the lines back on the chart here. You can see how we have the sideways move going since, like I said, about 8 months out, and that's actually a good thing. The market will actually do three things: go sideways, go up, or go down. And so if it goes sideways, that's actually one of a good thing to get the market to relax and ease. I call it ease. It allows it to rest for the next move, I believe, up. And I think that's possibly where we might be going, because every time we get to that bottom line there, it looks like large institutions are snapping up stocks to hold the price right at that range. So I think we're going to see some sideways move for quite a while, and hopefully break out to the top side of this line sometimes in the fall. But we'll have to just stay tuned and see what happens. I want to show you one more chart. This is a new chart that I haven't showed on the blog. This is a New York Stock Exchange. Very similar to the S&P 500. However, the New York Stock Exchange is the world's largest stock exchange, and it is based right here in New York. So it's a very good proxy of a lot of stocks, but what it does include is about 35% international stocks. So it kind of gives us a view of what's going on in the U.S. as well as international a little bit. So it's a good way of seeing what's going outside of the S&P 500, which is just large company stocks. But as you can see on the screen, again, I'm going to put up a couple of lines. This is a daily view of the New York Stock Exchange, and it's actually been going, sorry about that, actually been going sideways for several months, and the New York Stock Exchange appears to have been going sideways for quite a while, actually. Without the October lows of 2014, it looks like it's been going sideways for quite a while. So I believe that actually is a good thing, meaning that the market is using this to rest, as a long distance runner would do, and will pick up speed again once it's rested. And I believe actually moving out to the top side, but don't want to predict. We just have to wait and see what's going to happen. But I did want to show you a few charts to show you what is going on in the market. And a lot of what you see on the news, I've been watching it. If some of you have noticed it as well, some mornings they'll show, market is actually, tanking or, really falling quite a bit, and it's really not that much of a move down. Even though it's down 200 or 300 points, it allows the news media to get people to look at the screen, and which is their objective, not to give you objective a view of anything. It's just to get you to look at their ads when they put them in between. So keep that in mind, that sometimes the information you're getting from TV and other news media is really just sometimes to put fear in people so that they hurry up and turn the TV back on again so they can get the latest update, when reality shows that the market actually has just been going sideways in some big up and down moves, which appears to be just allowing the market to rest. And hopefully once it's completed with that, we should see a breakout one way or the other, but I think it actually might be to the top side. We'll have to just wait and see. That I am here to answer any questions. Most of my blog posts actually come from questions from readers and viewers, and also from clients. So if you have any concerns or questions, don't hesitate to reach out and get in touch with me, and I'll be glad to answer those as quickly as I can. I do reply to all emails and all contact questions. Hope to talk to you soon. Thank you.